Hello and welcome. As you can see on my screen in this video, we're going to be talking again about patterns and their use in trading. We know that candlestick patterns are tools or price configurations that are widely used, especially among discretionary traders. However, most of them are not codifiable and can't be described by strict rules. So what can systematic traders, who are obliged to define the rules of trading systems clearly and unambiguously, do? I'm one of the coaches at the Younger Academy, and today we'll try to answer this question. But before we begin, as always, I ask you to support us by leaving a like to this video, subscribing to our channel, and clicking on the notification bell to stay updated on the release of future videos. Thank you. Alright, so as usual, we'll start with an already semi-finished trading system. This system is a very trivial breakout system where new positions are opened in an attempt to follow the current trends of the market. For example, let's look at the last trade. This was a short trade, so we sell a contract at the lows of the previous session and then close out the positions at the end of the day. The code of this trading system is very simple. It was created using our proprietary Composer software with simple inputs. So let's go through this very straightforward trading system and let's analyze its performance on crude oil. We have created a chart from 2010 with crude oil price performance on a 15-minute time frame. If we open the trades at the breakout of the high and low of the previous day, we get an equity curve like this. It seems to be a pretty good and rising curve in one part of its history, but it's definitely not going anywhere in the remaining part where it's performing pretty badly. Now in this video, we're talking about patterns, price configurations that may help us select the right trades. In other words, we could filter the trades when the certain price pattern or price configuration occurs. Of course, our configurations aren't the most classic ones, like a double low, a double high, or even a flag. The patterns we use are a little bit different, and for this purpose, I want to show you one of the most effective patterns we have and use at Younger Academy. This pattern is called Daily Factor. We see it on this slide. For this pattern, we use the daily candlestick, the candlestick that's formed by considering the price swing of the entire session and distinguishing it between body and range. The range of the candlestick shows us the distance between the high and the low reached in the session. The body shows us the distance between the open and the close of the candlestick. I've drawn you a white bar here. However, it doesn't matter if it's a black bar, a white bar, a green bar, or a red bar, or if the close is greater than the open. What we're interested in when dealing with the daily factor is the ratio between the body and the range. The body is the absolute value of the difference between the open and the close, and the range is the high minus the low. So we'll make our breakout entries in favor of the trend only if we get this price configuration in the previous session. In the codes that we provide to our students, we've pre-coded all the patterns we normally use for simplicity. In order to test this pattern, we only need to change the inputs to allow long and short trade entries using pattern number 1, which is the daily factor. So I'll write that I use pattern number 1 for long entries and short entries. We give our OK, and you see that at the end we have this trade, and the trade in this session is already gone. How does that happen? Because the body in the previous session was more than 50% of the range. We opened at the lows and closed at the highs. Now let's take a look at the performance. As you can see, it's improved. We've gone from over 3,000 trades that we had before, with an average trade of $4 to $5, to an average trade of $50 and 1,800 trades. The equity line has also improved. We still have a bad period from 2023, but the filter work is far from over. So we could look at other price configurations to improve our trades even further. Now, I've not spoken specifically about the exits, the take profit and the stop loss, because I wanted to focus on the method through which we use the price patterns. There are already a lot of them, and as I've mentioned, they are already coded and introduced both in the Composer software and in the templates we provided to our students. If you don't have the experience to master these tools yet, and maybe need some help to invest systematically in the markets, you can access a page through the link below where you'll find some handy resources. From there, you can watch a free video presentation by Andrea Unger or order your copy of our best-selling book, The Unger Method, paying only the shipping costs. Then finally, you can also book a free call with a member of our team to get strategic advice. Finally, if you've not done so already, I'd like to remind you to subscribe to our channel so that you'll be notified immediately when new videos are published, and to leave us a like if you've found this content interesting. We'll see you again soon with more insights and ideas on systematic trading. Goodbye, until the next time.